Good morning and welcome to the Killik and Co Market Update. It's been a big week here in the UK and we've had the Labour Party's first budget for 14 years. We have made a separate video dedicated to the budget with our heads of financial planning and wealth planning, so please do give that a watch if you'd like to hear more about the changes to personal finances. In the market update video today, I'll be showing some charts about the impact on markets. First of all, there was a lot of focus in the budget speech on government borrowing and government debt. Here's UK government debt over the last 20 years, and you can see that rise following the financial crisis and the additional rise during COVID. There had been concerns in the lead up to the budget that Labour would borrow a lot more. When government debt is higher, investors will demand a higher level of compensation for holding government bonds, and therefore government bond prices will fall and government bond yields will rise. The same will happen when inflation is expected to rise, because holding a bond with a fixed rate of annual return and not an inflation-linked return becomes relatively less attractive when inflation is positive. And also, if inflation is higher, then interest rates must remain higher too to keep the inflation under control. The OBR, or the Office for Budget Responsibility, has said that the budget is likely to result in an inflation increase of 0.5%. On this chart here, you can see that the yield on the 10-year gilt was 3.7% back in September, and it rose to 4.2% in the run-up to the budget because people expected more borrowing. Following the budget, it crept a little higher, but we certainly didn't see the drastic reaction that happened after the mini-budget in 2022. Another area that could be impacted by the budget is employment. The additional £40 billion tax burden has largely been levied on employers. And in addition, there are increases to minimum wages and measures to make it more difficult to dismiss workers. These measures may well be good news for those already in work, but they are likely to make employers think twice about hiring. The unemployment rate is currently at a low level of 4%, so we'll be keeping an eye over the coming months to see how it moves. The UK's AIM index was another subject of the budget. At the moment, about 2/3 of the shares on AIM are eligible for what's called business relief, and that means that if the shares are held for 2 years, they will be exempt from inheritance tax. While about 2/3 of the shares are eligible, what's less clear is how many investors are actually holding the shares for this reason. It may be the case that many investors just want the exposure to smaller companies. In the run-up to the budget, there had been many rumours that this tax relief would be taken away, and the index had declined as a result. Here's the index over the last 5 years. It did very well in 2021 when interest rates were low, markets were rising, and investors were happy to take risk. However, appetites for smaller companies changed when interest rates started rising and the index then plummeted. It started picking up a bit when inflation came down and people started to expect interest rate cuts, but you can see it then went down again after the election due to fears about these tax benefits being taken away. In the budget, it was announced that these shares will be subject to an inheritance tax rate of 20% rather than the usual 40%. This was not as bad as had been feared, and therefore the index jumped 4% on the day. We're still in the middle of quarterly reporting season, and one company whose shares have hit a record high is Schneider. This is a French company that makes about 82% of its revenues from energy management. And this area has experienced a lot of demand given rising energy prices and rising demand for energy. Here's the 5-year share price chart. You can see the shares are up from €84 in 2019 to €240 today. While it's a French company, it operates on a global basis and is worth about €137 billion. Here's where its revenues come from. 40% actually comes from the US. There are lots of tech companies in the US building lots of data centers, and therefore the demand for energy and energy management is high. Here's the revenue growth for these regions in the last quarter, all very much in positive territory, but for the US it was 18.3%. So please do give us a call if you'd like to talk about this company in a bit more detail. Moving on to have a look at next week, we are expecting results out from Zoetis and Adyen. That's it from us. Have a great weekend, and we'll see you next week.